There we go. All right. Thank you, everybody, for joining us today. I'm Isabel DeShera with the Westchester County Bar Association. We appreciate you jumping online and joining us today to learn a little bit more about PPP loans round 2. With us today from M&T Bank is Erin O'Grady, Mike Madonia, and Gary Besser. I will let them jump right in and give us our presentation and take questions. If you have questions as we go along, you are welcome to use our chat over here. And then hopefully we'll see how we do. Maybe we'll be able to take some questions from everybody along the way as well. So I am going to turn it over to you guys. I will be here. I probably am going to mute my audio. I may mute my video too, just depending on what's going on in my house, but I'll be here if you need anything.
Perfect. Thank you, Isabel, and thanks to the Westchester County Bar Association. I'm really happy to be able to provide an update to the PPP program. And I know Isabel mentioned my partners, but I'd like to also introduce Mike Madonia, who's the team leader here in the Westchester market for business banking, and Gary Besser, who's my SBA in-house partner and also team leader. So we do have some really knowledgeable folks on the line with us, and I'm extremely proud to work for M&T, and I've been very proud of how we've been able to support small businesses. We've been able to provide 135 million in PPP loans within the region with an average loan size of 140,000. And I can't tell you how rewarding it has been to know that we've been able to help our local small businesses. So Mike, did you want to say something before I get started, or do you want me just to kind of go into it?
No, Erin, just happy to be a resource for everybody. Feel free to ask questions. You know, presumably you've been through this once before, so you know, there are a lot of variations to this new program and a lot that we'll be highlighting today. So just feel free to shoot the questions in the chat, and we'll answer those questions either as we go along or towards the end. And hopefully we could get to everything. If not, we'll make sure we get it back to everybody. But, you know, thanks for being here, and M&T is very glad to be a resource for you.
All right, thanks, Mike. All right, so I wanted to just touch on some key points as a result of the Consolidated Appropriations Act, the updates to the PPP program, just really high level. This PPP program was designed to keep people working during the COVID pandemic. The updates allow for businesses that didn't take advantage of the program to take a first draw if they haven't done so, with allowable eligibility of 2.5 times payroll up to 10 million, and also allows for a second draw, 2.5 times payroll up to about $2 million. Both of these draws require you to provide documentation, and it also allows for an expansion of coverable expenses. One thing it also does is it prohibits people from applying from business owners that have gone out of business from applying for additional monies. And what this update has also done, it simplified some of the forgiveness for business owners that have applied for loans up to 150,000, and we're still waiting on that updated application. So that's just really high level. I wanted to go over the slide that I have on the screen right now that kind of breaks out some of the requirements for the first draw and second draw loans. So for the initial first draw, so folks that didn't take advantage of this the first time around, part of the eligibility requirements were you had to be in business, you had to be in operation on or before February 15th of 2020. And you had to have not previously received a PPP loan from M&T or any other financial institution. You had to have no more than 500 employees. And then as far as the loan terms go, you were eligible to apply for 2.5 times payroll up to $10 million with a 5-year loan term. And then the eligible expenses here are broken out. There's payroll costs, rent and lease agreements, business mortgage interest, utility payments, covered operational expenditures and expenses allowable for PPP, property damage, and supplier expenditures. What's important to note here is for the loan forgiveness. So folks that didn't apply for this the first time around, if you do apply for it now, the loan forgiveness requires that you use 60% of the monies that you get on payroll, okay? And then it's also important to note that that your employee compensation levels maintain the same level. In other words, you don't want to be giving yourself or employees raises in order to bump the payroll uses, because that's not something that's going to be able to be qualified for forgiveness. When I move over to the second draw on the PPP loans, the eligibility is a little bit different for second draw. Generally, the applicant, right, in order to be able to apply, you need, again, to be in operation on or before February 15th of 2020. And this is kind of important to note here. You needed to know if you, let's say in this instance, you took advantage of the first draw, you have to have used all of that money, or you will have used all of that money prior to getting the second PPP loan. Okay, so that's important for me to note, and I'll say it again. When you apply for the second time around, if you got money in the first round, you have to have used all of that money or will use all of that money before you get the second loan dispersed. You can't have more than 300 employees. And it's important to note here, you have to be able to show a 25% reduction in gross revenues comparable, and you can do that in comparing quarters in 2019 and 2020. And you use that, you're going to show gross receipts to be able to show that.
So Erin, I just wanted to take a second, because I think the important, difference here is not only the 25% reduction in gross receipts, which is a qualifier for the program, but also, Erin mentioned that you have to use or will use, intend to use. That doesn't necessarily mean we're fielding a lot of questions on this particular line item. That doesn't mean that you have to have been forgiven for your loan, or even have applied for forgiveness yet, because although the 24-week period for you to use those initial funds is long over, you still are within most likely you are still within the guidelines for applying for forgiveness. So that you don't need to rush to do that if you haven't done that already.
Correct. And there was also something to mention for folks that in the part of the eligibility here for the second draw, if there were some folks that did apply for forgiveness and weren't forgiven, that would be something that would preclude them from being eligible for second round. I wanted to clarify definition of the employees here. So employees would be considered full-time and part-time. So it's a very broad scope. I believe 1099s as well. All qualify. Okay. As far as the eligibility for how much you can apply for, again, it's 2.5 times monthly payroll up to $2 million. And then here, it's important to note, depending on the NAICS code, if there's a NAICS code of 72, you can apply for 3.5 times the average monthly payroll. So those businesses would be accommodations and food service loans. And then the eligible expenses remain the same. And then also the same thing applies for the forgiveness. It would be 60% of the use of funds would have to be spent on payroll. That's really the gist of and the broad overview of the updates to the first and second draws. I'm trying to see if I can look in the chat to see if there's questions.
We have two, Erin. One is, how do you determine the deadline to apply for the if it's your first draw PPP?
Sure, I could take that. So
Okay.
if you're only eligible for one loan per tax ID number, let's call it, per draw. So if you've already received a first draw, you can't go back and amend it, and even if you think you should have qualified for more, that question has come up. So you can't go back and say, okay, well, I applied for 100,000, but I didn't include my salary as the owner, and I really should have. Unfortunately, you can't go back in there and amend that. So if you've received the first draw already, you're all set. If you're looking for your first draw this time around, you can apply for your first and second draw. So if you qualify for a first draw, chances are you're going to qualify for a second draw, unless you don't meet that 25% reduction for the second draw. So you could do both, and that really is going to depend on your the institution that you apply with. As soon as far as M&T goes, as soon as our portal opens, we are allowing for first and second draws. Again, first draws only if you haven't received the draw already on the first time around, and open for the second draws as well simultaneously.
There's also a question about 1099s. Since they're independent contractors, they do apply this time. It does apply this time, or do they count as far as your salaries?
The 1099 issue, I'm going to make sure that Gary's going to keep me honest here. And Gary Besser is a really wonderful resource to have at the bank. He's been with the bank, geez, 7 years now, almost. And yeah, almost. And Gary actually worked, and in his prior lives, he has worked at banks running their SBA programs, but actually also worked at the SBA. So it's a nice resource to have. So the independent contractors run along the same lines as the first time around. So if you're an independent contractor, you can apply on your own. If you hire independent contractors, you can't include them in your loan request because they can apply on their own. Correct. And that's the same as the first time around back in May, April and May. It's the same now.
That's right, Mike. If you are an independent contractor, you can apply for this assistance. But if you hire individual contractors as part of operating your business, those individuals you've hired have to apply on their own for assistance.
And what about people who are solo? So if you're a solo practitioner, is it your yearly draw divided by 12? How does that work for them? Because we do have quite a number of members, and I'm sure folks on here too who are solos.
Gary, you want to take that?
Yeah, I believe that's correct. You would look to see what your draw has been, and you don't want to elevate that to give yourself a nice big raise before you apply.
Okay. And what else we have over here? Forgiveness is how do people determine their deadline to apply for forgiveness on their first, if they got a first draw?
Erin?
So it should be on the actual, on the note. It depends on when you actually got dispersed. And I think it's 10 months. I can confirm that amount. The date.
And your payroll, there's one here. I just want to make sure I get this right. Is the payroll determined as of the date of application for the second draw? So if you're figuring out your 2.5 times payroll, it's based on previous quarter, previous months, current?
For the second draw, it's 2.5 times payroll. Gary, I don't know, maybe you could answer that.
It's 2.5. So, okay, it's a very good question. So
'Cause it's not spelled out.
Yeah, keep in mind that a lot of this data is based on 2019 information. So you're taking your average 2.5, your average payroll for 2019 multiplied by 2.5 times. There are going to be circumstances, because you have to be, Erin mentioned that you have to be in operation on or before February 15, 2020. There are going to be certain instances where you may apply and you don't have information to compare it to from 2019. So if you started your business in the fourth quarter of 2019, or if you started your business, in January of 2020, you could certainly still be eligible for that program. And in those instances, you're going to be, for draw 2 purposes, you're going to be doing your comparisons, your 25% reduction against your first. We're going to take any quarter in 2020 and compare that to your first quarter in 2020. So that's going to be allowable. And then similarly, you could take your most recent payroll and use that information if you don't have an average payroll for 2019.
There's a good one in the chat for you. I'll read it, but you might want to look too. So clients that took the EIDL loan might have high cash balances in their bank accounts. Then will this affect their eligibility for this second round when it comes to the necessary concept?
It shouldn't, because you shouldn't be. We're going to be looking. We haven't gotten the checklist yet. I'll also say that this week the SBA has opened up a small percentage of the funds. They've allowed the community banks to open up their portals and start taking application. M&T and most of the rest of the banks are going to be following next week as mid-size and larger lenders. Not to say that there's going to be a run out of the funds, because we don't expect that to be the case. We expect to be able to help every single customer who applies. But to answer the question, is we haven't gotten the checklist yet, but I imagine that you shouldn't be recording. You wouldn't be recording. This might be a tax accounting question. The EIDL loan is a cash inflow for you, but it wouldn't be a revenue item for you. So it shouldn't be counted when you're showing your P&Ls from one quarter to another. Shouldn't be reflective of any sort of influx of a loan like that.
Yeah, and Mike, to add on to that, remember that these PPP loans that are being made are not credit decisions, really. They are, the customer or the business is coming to us and they're saying that my sales are reduced by 25%. They're attesting to that. And they're telling us what their 2.5 times payroll is. And we're not looking at their financial statements and making credit judgments as to who gets the money and who does not. So if they have an economic injury loan already and they still have the cash, I don't see how that impacts the application for a PPP loan.
Right.
There's another question on there about that someone's seen on the second round app that it asks for the loan number. So how can someone then apply for simultaneously for a first and second? Or is that something they can't do?
You can apply if you don't have a first loan, a first draw. You can apply for a first draw and a second draw. So your financial institution should provide you, like we're going through the process now of setting up our portals, that will have an avenue for you to apply for your first draw if you qualify for it and you didn't receive it the first time around, and we'll have an avenue for your second draw.
Another good one.
Yeah.
You wanna
I
go,
believe-
Gary? Go ahead.
No, I was just going to say, I believe you'd have to provide, if you had a first draw, you're going to have to provide the loan number.
Yeah, I think
So you'd
that's what
have-
they were indicating, that there was a
Yes.
place to put that. So if you don't have that, obviously there's got to be, you guys are going to, then you guys are dealing with that on your portals, that if somebody doesn't have that, that there's a different pathway for them.
I
Yeah,
wanted
Well,
to-
Isabel, if they received a PPP loan previously, the loan number is going to be on the note.
That's right. You'll have a loan number. So you'll have an SBA loan number, and you will have your financial institution's unique loan number for your first loan. So I think we'll probably get to this in a couple of minutes, but
Yeah.
some of the things to have handy are your note with your loan numbers. That's really good to have handy. Your eligibility, proving your 25% reduction in any quarter compared to the 2019 quarter. Those are good things to have handy. And also the applications are out there, but I don't necessarily think it's a great idea to go and fill out the application, because you're just going to have to fill it out online anyway with your bank. But that's out there as well.
Yeah, and Mike, Gary actually shared this with me a little while ago. It's hot off the press, and I think it's, I'll share it with Isabel. Isabel can post it. So this is just the guidance that was provided from the SBA to the lenders, and I'll flip back. It has the application on here, but there's, Q&A provided, straight from the SBA, which is really, really, really useful. So, I definitely will share that with you as well. I'd like Gary to share some of the other exciting piece of this as well, with regard to the SBA and financing. And I'd love for him to talk a little bit about that for our existing borrowers.
Okay, Erin. Mostly what I do here at M&T Bank is assist the business bankers with their more traditional SBA loan opportunities. What loan programs best fit the customer circumstance, and how do we put the loan together in the right way? And this same legislation that approved additional money under the Paycheck Protection Program did a lot more than just PPP. And the highlights of the other legislation, a couple things. First, until September 30th of 2021, SBA is waiving the one-time SBA guarantee fee that is charged to the customer on both the SBA 7A term loan program and their SBA Express loan program, which is often used for lines of credit. And for customers we're working with right now, that's saving them a lot of money. So that's a good thing. Businesses should also know that the maximum amount of the SBA guarantee support, the guarantee percentage that the banks are going to have available until September 30th, is also increasing. So across the board, what SBA is trying to do here is encourage lenders to lend to credit-worthy businesses, and so that's a good message. Lastly, for loans for the regular guaranteed loan program, for loans that are approved on SBA's loan system, on their computer system, from February 1 through the end of September of this year, my best intelligence on that is that the SBA will be making the first 6 payments on that loan on behalf of the small business to their bank. A heck of a additional benefit to get those businesses off the ground and hopefully through this rocky period coming up this year. So when you take all of those benefits together, they're very much encouraging banks to work with their small business applicants and hopefully making the program cost effective, and to get those businesses up and going by helping with that loan payment up to a maximum of $9,000 a month. So those are the big things that were in the legislation that were different or other than all of the PPP discussion.
Thanks, Gary. There's a couple of other questions, and again, I'll just read them because I'm sure if I'm somewhere, feel free to kind of unmute yourself if I'm not going in the right direction with this. It was somebody who asked, what if they received employer credit refund? And again, they weren't sure if that was the exact title, but it was applied for on the FED 941 in July of 2020. Can they apply, or is that's too specific that they need to get to their own bank?
You're talking about the full-time equivalent.
I'm not sure. I'm reading somebody else's question. So
that's an accounting question.
Okay.
I would recommend that you talk with your accountant, because the way I read it was that it's either one or the other. But I can't opine on that.
Okay. And then there's another one about a co-op. If can a co-op receive apply or at the first time, even if there was no reduction in income?
Co-op. You mean for the under the first draw or the second draw?
I'm
It
not
sounded
sure.
like
Ken, do you want to clarify? If you're there, do you want to clarify your question? Are you here?
Mike and Erin, I simply don't remember if co-ops were eligible the first time around. I'd have to go back and read it.
Don't either. We can go back and look.
Yeah, I was going to say I never got past the fact that that professional associations like the bar didn't qualify the first time around. So we're happy to see that we might qualify this time around.
I could talk about that for a minute. So the eligibility for the first time, although they opened it up, hasn't changed. So Isabel, like you said, if you weren't eligible the first time around and now you're eligible because of the changes, you're eligible under the second draw. They didn't change the eligibility under the first draw program. And if you are eligible for the second draw, you still need to meet the criteria of a 25% reduction. Let's take a step back. I mean, the reason that that's in there and that some of the other restrictions are in there is because, and I get it, the way that the program was initially rolled out, it was basically to everybody. And it was to get money on the street, to help for payroll, to help with the unknown. One of the consequences you've all seen in the news was, you see businesses that took these loans that wound up being forgiven. So essentially the grants, and that didn't need it, and you saw it, they're eligible. So they took it. The changes in here, the restrictions in here, changes for, try to make it truly towards small businesses, the reduction in the amount of employees and the changes with the 25% reduction. They're trying to make it for the small businesses who truly need it. And that NAICS code 72, I think is really great as well, because then that further hones in on those businesses that were really shut down. Those are your hospitality industry, your restaurants, hotels, small hotels, things like that.
And there's an opening this time around for additional funding for things like theaters and stuff like that still can't open up, right?
Yep, that's down. Actually, that's in this booklet here for the shuttered venue grants. There's a whole section on that in here. You go to all these pages, they have all frequently asked questions. And then there's a whole section on here just on shuttered venues.
Right. I mean, I'm sure a lot of people support organizations and that have been struggling. I know, I've worked with a few in the past, so it was kind of nice to see that. And let me ask you, because I know this one came up as a side conversation for all of us, and it might impact other people too, is whether or not your financial institution where you do your banking, is participating, not participating, dropped the ball on it the last time. What do people do if they want to work with a different financial institution?
So absolutely. So if you didn't have a good experience with, the bank that tried to help you the first time around, we would love to be able to help you. We would need you to have, an account with us prior to us opening up the portal. But that being said, we also, want to be in a position where, we are truly going to be, your bank. So, we do have time to establish accounts and start migrating over balances to make sure that you are able to get a loan with us or apply for a loan with us. I should state that just because you open an account and apply, obviously you'd have to be eligible to get the loan. But yes, we can work with businesses if you open an account with us prior to us opening the portal.
There were a lot of, it's a thing that has come up in a couple of, when we've done sessions like this, that people had good and bad experiences with their particular, home bank, if you want to call it that. And
Right.
just wanted to make sure that was kind of covered in there. Didn't they make changes this time to the terms too? Wasn't there something about an extension of terms, or was that something, did I read that wrong? It was like 8 to 24 weeks or something.
Well, the 8 to 24 weeks is that's the amount of time that you could choose minimum, your 8 or 20 period. That's the amount of time. If you remember, that was an adjustment that was made because people weren't able to. A lot of businesses weren't able to use the funds, in that manner, so that there wasn't going to be a lot of forgiveness out there. So your application is based off of 2.5 times your payroll costs, and there's a couple of adjustments in there too. You want to make sure that you have look over the list. We can be a resource for you guys too if you're looking for additional resources. With that being said, that's your application. Now we're talking about using the funds. You have to use the funds. You could choose the 8-week period. You could choose the 24-week period. You might as well choose the 24-week period. Use the funds within the 24-week period for eligible expenses, and then your loan should be forgiven. We look at the top-down approach when you're submitting for forgiveness. We're going through this right now. So if you've got $100,000 loan and your payroll covers $100,000 in, let's say 16 weeks, then you supply that to us during the forgiveness period. And if you guys are going through the forgiveness now with your current financial institutions, you'll know. You supply that, and that's good enough. It's checks and balances, both sides of the equation equal out. You don't have to supply a whole huge laundry list of more expenses, because all we have to do is get to the $100,000 mark.
And there was a question, applications, they're partially online this week, right, for smaller institutions, and then the expectation is they'll open up to larger financial institutions probably within the next week sometime?
Correct. The guidance from the Congress was it's opened up to some of the smaller institutions. Right now, they're trying to roll it out appropriately, and I think we're as soon as we're allowed to, we're hoping next week, Mike, right? That we can open.
Yeah, as soon as it's available, we'll be opening.
Okay, and then Ken just followed up. So if there's no loss of income for a qualifying organization or institution, then they're not eligible overall, right? So if you have an organization that's been flat or no difference from 2019 to present for any quarter, then they don't qualify.
For the second draw.
For the second draw. Okay.
Correct.
And I think I put it in the chat, but Erin's going to send me these documents and I will send them back out to everybody. You'll get another email from the bar that'll give you a link where you can grab the documents. We will probably also move some stuff up online into the resource section as well, for those that didn't attend, so they can access this as well, because a lot of this is publicly available, but we would just want to make it easily accessible for y'all.
Any other questions?
I'm not seeing any. Anything else out there, everyone? We're good? Excellent. Thank you so much. Feel free.
Yeah, actually, there was one other thing, Isabel. So sorry, because I think this is important for a lot of people on the line. If you received an EIDL loan advance, chances are that, and you also applied for forgiveness, chances are your forgiveness was reduced by the amount of the EIDL loan advance. So that's your loan, typically could be 5,000, 10,000, 15,000 at the max. And the banks were being directed by the SBA to reduce the forgiveness on the PPP loans by the EIDL loan advance. That was since in this bill unwound. So we are, as an institution, systematically going back for those people, because what happened was we would forgive the loan minus the $10,000. You're sitting with a loan of $10,000 that you're required to pay back. So we are systematically going back and wiping those out. Other institutions might be handling it differently. I imagine it's probably going to be all the same. But the SBA has now came back and clarified that those should not be reduced. Your forgiveness should not be reduced by the EIDL loan in advance from the first PPP loan. You guys who are sitting out there with your with EIDL advances, may want to contact your institution and listen, just ask them how they're handling it or how they plan to handle it. It's going to take a little while for us to unwind it all because there's a lot on the books, but we're going through, and you won't be responsible for interest on those loans either.
That's great. Thanks, Mike. Anybody else? Any more questions? Hope it gives you a little bit of a head start. And as I said, I'll get the documents to you. We'll get another email, and then we'll get things posted as well. So I'll get something out to you this afternoon that we'll let you download, and then we'll also get them posted up online so they're accessible for people. So we appreciate you joining us today. Everybody take care and be well, and we'll see you online again at something soon.
Thank you.
Thank you. Thank you.
Thanks, everybody. Have a great day.